Welcome back, everyone, to another episode of Global Finance Today. In this episode, we're diving into a fascinating development involving China and its recent activities in the gold market.
That's right. It's quite intriguing to see how aggressively China is purchasing gold. The topic has been buzzing recently, and it's gaining attention from economists and investors around the world.
Absolutely. And to give everyone a bit of context, China's push into gold buying isn't really new, but the scale at which they are purchasing now is remarkable. The Chinese government and private investors alike seem to be scooping up gold at an unprecedented rate.
Yes, and there are a few reasons why this might be happening. Primarily, it appears to be a move to diversify their reserves away from the U.S. dollar. With the ongoing tensions between the U.S. and China, it makes sense that they'd want to hedge against any potential financial vulnerabilities.
That's a valid point. Diversification strategies are crucial in these volatile times, and gold has always been considered a safe haven asset. There's also another layer to this. By buying gold, China could be aiming to bolster its currency, the yuan, to make it more competitive on the global stage.
Speaking of global impact, this gold buying spree by China is affecting gold prices worldwide, isn't it? We're seeing prices fluctuate more frequently, and analysts suspect China's purchases are a significant driver behind this volatility.
Right, and that brings in various challenges and opportunities for traders and central banks globally. For traders, the increased volatility could mean more chances to profit, but it also increases the risks. Central banks, on the other hand, might see this as a signal to reassess their own reserve strategies.
Exactly, and let's not forget the broader economic implications. China's accumulating gold might also reflect their broader economic policies, perhaps indicating a shift towards more controlled and insulated economic practices amid global uncertainties like trade wars and geopolitical tensions.
Indeed, and this accumulation of gold can also be seen as a sign of strengthening confidence within China about the future of their own economy. They are essentially preparing for any scenario, ensuring that they have a stable reserve to back their currency should any global financial shocks occur.
It also raises questions about the transparency of China's actual gold reserves. While the official numbers are reported, there's always speculation about whether those figures tell the full story or if there's more gold in their vaults than is being disclosed.
That's a fascinating aspect indeed. The mystery that surrounds China's gold reserves adds an extra layer of complexity to the global gold market dynamics. Moreover, how they manage these reserves going forward will be crucial, not just for China, but could influence global economic policies as well.
As we wrap up today's discussion, it's clear that China's aggressive gold buying strategy has multifaceted implications for global economics and finance. It'll be interesting to see how this plays out in the coming years, especially in relation to currency markets and international trade.
Absolutely. We'll continue to keep an eye on these developments and bring you the latest analyses and insights. Thank you to our listeners for tuning in today to Global Finance Today. Do join us again next time as we explore another compelling topic in the world of finance and economics.
Until then, keep an eye on the markets and take care.